Hi, this is Thierry Samlal from PMML. Today I would like to present to you the month of February 2021 in the multifamily Quebec market. So we're in February. We're still fueling off an exceptional month, which was the month of January 2021, which was a record-breaking month in Quebec. We're still on the COVID effect that lasted most of 2020, where we saw the price per door rise, and it's still rising at the moment that I'm doing this video. We're also seeing the number of transactions of multifamily properties which are exchanged and sold increasing. Also, the cap rates are diminishing, which is showing the effects and the results of an incredible market right now. We have a lot of owners that already have properties in Montreal, in Quebec, in the province of Quebec, which are refinancing right now, maxing out the possibility of financing their equity and turning around to the market and saying, okay, what am I buying right now? Where am I going? We also are seeing some portfolios that are being sold. We had an important transaction take place. The Ramco portfolio sold in December, January 2021, December 2020. We are continuing the tidal wave with more portfolios sold. So we're going to probably see during the year 2021 other portfolios being, other transactions of portfolios being done. So I would like to expose to you three major transactions. The first one is assets of the Oxford Property Group, which is owned by an Ontario public pension fund that decided to sell more than 500 doors in the national capital, which is Quebec City, in that area, in the Le Bourgneuf area of Quebec City, which is a little bit northwest of the city, very accessible to Old Quebec for those who know Old Quebec and the city itself. So three different small portfolios, all built in 2011 to 2018, all sold in one package to a Quebec-based owner, constructor, contractor, and also a manager and property owner that bought this portfolio and integrated it into his existing portfolio. So just to note that I had a chance to visit one of these properties earlier in my career, and at that time the model was to attract empty nesters and also to attract professionals to come in and live in a condo-style environment with very modern units, very well located, and lifestyle that goes around it. So congratulations to the owner that bought these properties. The portfolio sold for $117 million, 117 million. So that's a large amount. It's a good amount for the province of Quebec. It's one of our largest transactions. Very interesting to see that quantity of asset could be sold at the same time in the province. A transaction at about $220,000 per door, which is pretty representative in Quebec City for that type of asset. But if you come to Montreal, naturally the price per door is much higher. And if you're trying to buy newer property, newer built property in the Quebec City region or in the Montreal region, you're not going to be paying $220,000 per door. So the buyer did have a chance to amalgamate 500 doors and above to integrate that into his portfolio at a reasonable price with a capacity to still increase the rents on it. So very interesting. Second portfolio in the Anjou district of Montreal, which is northeast of Montreal, more than 300 doors sold. So imagine two large buildings that have more than 300 units in total, so about 150 each, 6 stories high, plus a basement, concrete construction, common areas, common pool, etc. Sold for a very reasonable price around 110,000 per door, which is very low for Montreal. So we could guess that there's large optimizations that could be done on this portfolio. It was sold by a Vancouver-based Aquilini group that sold the asset. So they're mostly in the professional sports or in hockey. They have hotel chains all over Canada, residential, commercial buildings. They're also into farming also. So they sold that asset, and now they're probably going to re-inject into other projects that they're going to deliver over time. So very interesting asset. Third asset that sold is on the south shore of Montreal, approximately 400 doors that sold. That's a Quebec-based owner, Montreal-based owner, mostly on the south shore, that sold to a Quebec-based owner. Congratulations to that owner. I know both owners. They both did a very, very nice transaction. Interesting to see that portfolio sold for about $110,000 per door also, which is quite low for the area. I've done a lot of sales in that area in the last year, and the price per door is much higher. What's interesting here is that we have 12 different buildings, mostly in the 16, 20, 40, and 45 door category. All sold, they're all in the same district. So the buyer probably wanted to, first of all, have a volume of acquisition. But what's interesting also to hear is to see is as far as management, because the buyer is going to be able to manage the whole district, the whole area, control pricing, control availability, and then also control the quality of tenants that are going to be living in that area. So very nice asset that has sold there also. Let's look at very quickly the statistics of the Montreal region and the greater Quebec region. For both regions in the 5 to 11 plex category, which is about 77% of the Quebec market, 77% of what's sold in a year, well, the price per door has increased. The transactional volume has also increased, and we also have a compression of the cap rate. So very interesting to see that more assets are being sold, probably at with lower return, but with value add over time. So that's interesting to look at also. If we're looking at the category of 50 doors and above, less transactions in Montreal from the year to date, from February 2020 to February 2021, less volume. I'm sure that's going to be corrected over the year. We're going to have more transactions that are going to be carried out in the next year. That's for sure in the portfolio category. Also, the price per door that's compressed a bit, but a cap rate that's shrinked a bit also. If we're going on the Quebec city side, the number of transactions have increased. Naturally, with a transaction of 500 units in Quebec, it would impact that market. You would see that appear in the transactional volume, a slight compression per price per door, but also a compression of the cap rate also. So if we do a recap, Montreal and Quebec markets are doing very, very well. The same thing we haven't spoken about the Sherbrooke market, Gatineau market, or other sub-markets, but they're all doing very well. Transactional volume has increased over the global market. Compression of the cap rates is continuing, even with a rise of the interest rates that we're seeing right now. Because we're at the beginning of March now for the February market. And also, we're also seeing price per door increasing. So very interesting to look at the multifamily markets. Follow us on PMML.ca. You could also follow us on LinkedIn, Facebook, Instagram, etc. We're available if you have any questions on the market. I'll see you next month, in the month of March, for the next Market Watch. And let's keep in touch.